Assalamu alaikum dear students. In previous lecture we discussed the special transactions and we discussed the banking transactions. I hope you understood. So today we will be discussing some other special transactions. Now firstly we will be discussing the cash and credit transactions. Cash and credit transactions. The cash and credit transactions. If you remember in the lecture relating to accounting equation that I delivered, I discussed how to differentiate between the cash and credit transactions, how to identify the transactions. So cash and this topic here relates to that topic, so we don't need to discuss it here. I think what you will have to do, you will have to consult that lecture, consult that discussion, and this will be cleared there. This is related to how we differentiate between cash and credit transactions in different situations. Let me remind you, in the chapter accounting equations, I discussed how to identify the transactions. For example, sold goods for rupees 1000 and sold goods to Mr. X rupees 1000. How to differentiate between these two transactions, which transaction is a cash transaction, which transaction is a credit transaction, and how to record these transactions. So I would like to request you to consult that lecture so that you will understand the cash and credit transactions, how to differentiate between the cash and credit transactions, and how to record them in the journal. After cash and credit transactions, we will move to trade discount and cash discount. Trade discount and cash discount. So we will move to this topic, special transactions relating to trade discount and cash discount. How trade discount and cash discount are treated and how these are recorded, how the transactions in which these trade and cash discounts are included, how these transactions are recorded in the journal. Today we will be discussing it. Before discussing how trade and cash discount are recorded in the journal, let us recall what the cash and trade discount mean. The meaning of trade and cash discount. I hope you have read, you have studied about, and you know about these two terms, trade and cash discount, because in the second chapter, in the third chapter of this book, I think these two terms, trade and cash discount, are defined. So if you don't remember, you will have to consult the book and see what these two terms mean. Let us remind, trade discount and cash discount. The discount, the term discount is related to the concession. It is related to the concession. And both the trade and cash discounts are related to the concessions. But there is a difference between the two. Trade discount is that concession which a supplier gives to the buyer in the list price. You know that. Trade discount. Trade discount. The concession given in the list price list price or invoice price. List price or invoice price. The concession given by the supplier to the buyer in the list price or in the invoice price is called a trade discount. What does this list price signify, or what does this invoice price signify? You know that whenever a buyer goes to the supplier in order to purchase some goods, the supplier offers him a price that I will be selling these goods on this price. And for example, the supplier is selling these markers. If the supplier says that this marker costs 110 rupees and I will be giving you the discount of 10%. That means 110 rupees minus 10% of this 110, that is, this marker will be offered at a price of only 100 rupees. On the other hand, this costs 110 rupees. At the time of purchase, at the time of sale, when the supplier offered this product to the buyer at a concession, at the time of purchase or sale, when the supplier offered this marker to the buyer, to the purchaser at some concession, at that time that concession will be called as trade discount. You know that. And cash discount. Now, for example, the buyer, the purchaser, purchases this marker on credit basis. Not on cash, but on credit. He purchased this marker on credit basis and says that I will be giving this 100 rupees to you at some future date. Then the supplier says that at a later date, at some other point of time, the supplier gives another offer to the buyer, to the purchaser, that if you will give me this, return me this 100 rupees of this marker somehow earlier, I will give you another concession. That will be called as cash discount. Let me discuss in detail. You know that trade discount is a concession which is given by the supplier to the buyer or purchaser on the list price of goods, on the invoice price of goods at the time of actual purchase or sale. And cash discount is the concession given by the supplier to the buyer to collect the cash from the buyer if the purchase or sales were made on credit, to accelerate his cash flows. The basic purpose of allowing the cash discount, trade discount, is to capture the market, to capture the customers, to win the customers. For example, if this marker is offered